Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 17th of October. And I suppose it is October. We're in what is traditionally crash season. And here you can see that markets come back down to the floor of that rising trend channel from June, 50-day line around 92.80 level. And so far, I suppose it's good in the sense that we bounced off the floor of the channel, if only marginally. RSI now below a neutral 50, which is obviously a negative if we stay below that on an end-of-day close basis. If that is the case, then looking for September support there towards the 91.80 level. But ideally, we stay within this rising trend channel despite the US credit scare that we have had over the last 24 hours. Still trying to break now. Well, in terms of the upside, need a break at least back above the 93.90 area, which was support during the week before the breakdown that we've seen today. Moving along to the DAX, and here we're also at the floor of the rising trend channel from earlier this year, so that's around 23,700. We've got the risk of a move down to the 200-day line for the first time since April, which would be quite a shock, really, I suppose, after the bullishness that we've had, but that's around 23,000. And while we're below RSI 50, that's the risk that we have for this market. In terms of what would get this market out of jail, it would be an end-of-day close back above the 50-day line there at 23, well, basically 24,000. But at the moment, for the big gap down that we've had, that seems quite a long way away. Ideally, we stay at or above the floor of the channel there at 23,600. Moving on to the Dow, and here you can see that a bit of an out-of-date sort of number there for in terms of the yesterday's close, but it's obviously before all the negativity hit the fan. In terms of what might happen next, we've obviously got the 50-day line there at 45,600, and at the moment that is basically where the market is. So I suppose that is a positive, but we really need to stay above the existing October support there, around the 45,500 level. If we can do that, then this may be a bit of a 1-day or 2-day wonder in terms of the a bear breakdown. The negative, though, at the moment is the way that, apart from fading at that resistance line there, 46,300, the way is that the negative here is that the RSI has fallen below neutral 50, and obviously that would be, and in a way, just that rebound and then failure in the low 50s is actually a sell signal. So probably braced for a worst case scenario around 44,800 if we don't manage to find support at last week's support levels. Onto the cryptos, and first one is Bitcoin. Here you can see that it's done what we really didn't want it to do, which was break down through the floor of the rising trend channel, so break down below 110, and also break down below the 200-day moving average around 107. That suggests that we've got to have a test, basically, of the June support area, or at least the 100,000 area, so down towards 98,000, 99,000, something like that, even if this market rises after that. The bull trap through the 50-day line and the RSI failure below neutral 50, that was the big giveaway that we'd have a breakdown today. To get out of jail, back above 107 is probably the minimum requirement. That was the August-September support. Onto Ethereum, which I suppose if Bitcoin's looking bad, Ethereum look even worse. And actually, I suppose that's not quite the case yet, but we still have the problem. We fell out of that rising trend channel, 39.50. Below that, there was always the risk of a test of August support, 33.40. RSI 50 failure as well. So probably looking for that 33.40 area, and even as low as the 200-day line, 31.66, given that this market is above its 200-day line, and the Bitcoin, it's actually below it. So in a way, actually, this is still outperforming, which is quite interesting. On to gold, which has obviously been outperforming everything in the recent past, and here actually going towards our a new best case scenario target, which is that November resistance line projection to 4,500. Looking for that by the end of this month, while we're above the old target there, the old target line, 41.80. So let's see if gold can come up with the goods. Moving along to the stocks, and it's quite difficult getting extracting the stocks today, obviously with a big down day for the market, but Ascent is first on the list, and here we're still going with the idea that the market is consolidating, obviously on a down day. Sideways shuffle above a rising 50-day line, double dip there for the RSI above neutral 50. So we're still looking for this market to spike up, not only to retest last month's 0.6 resistance, but actually head as high as 0.8 by the end of next month, while we're above that 50-day line and RSI 50. On to Bradda Head, which after years in the wilderness seems to be back. The other point here, I suppose, is that lithium and lithium stocks seem to be on a rather better, have a rather better look at the moment. But here, big key reversal to the upside, and also a rebound above a rising 50-day line there at 1.08 pence. The view at the moment is that while we're above the, or at least on the right side of 1.25 pence, looking for not only a retest of that target line there, 1.75, but actually up to 3 pence by the end of next month. That is a late 2023 resistance line projection heading with a 3p, and we're hoping for that by the end of November, especially after this RSI rebound above neutral 60. On to Blencowe, and here, even though the company is sort of very keen on having almost an interview every day, here you can see that we are heading rapidly towards that 8 pence target there. I think that's the third target we've had in the recent past, and that's a resistance line projection from way back in 2021. Obviously, you can see the main resistance here from the last few years back up at 9p. So maybe 9p could be regarded as a best case scenario target of Blencowe by the end of next month. As I said, lithium looking a bit better at the moment, and Cleantech also actually enjoying that. We're back above the old July-August support area, around 5.25 pence. Above that, looking for the top of the range, up towards 8 pence, perhaps as soon as the end of next month. It depends exactly where that price channel top is. Could be as high as 7.5 to 8 pence. Upside value while we hold above the 50-day line there at 5.3 pence. And the other point to note is that you can see 4 out of the last, or 3 out of the last 4 days, we've opened at the low, closed at the high. So it's very strong price action, especially given today's market sell-off. Moving along to Chesterfield, and here we can see that the shares have delivered a decent result. The target here, initial target here, was around 1.17 pence, and looking for the next level up here as high as 1.75 pence, and looking for that hopefully by the end of this month. Upside value while we're above that old target, the red line there. On to Eurasia, which seems to be benefiting maybe for thoughts of some developments in the Russia-Ukraine space. So we've got a falling trend channel there, top of the channel there, around 5.4 pence. That's what we're looking for while we're above the 50-day line at 3.75 pence, and hopefully we'll get that by the end of this month. Next up is the Eco Buildings, which has been called up here quite successfully. And here you can see there's we're still going. The top of the triangle there, which was the previous target, the second target at 9.25 pence. Above that, we're looking for 14 pence by the end of this month, or even sooner. The way things are going looks very strong indeed. See the main resistance area there is 14 to 15 pence. Upside value while we're on the right side of 10 pence. Going back to a Russia-Ukraine play, we have Ferrexpo, and here coming back to life with the bounce above a rising 50-day line. Top of the channel here at 64 pence, so that's what we're looking for in coming days, maybe even by the end of today if we're lucky. And then after that, it's the main 80 pence resistance area from basically post-February, so actually 87 pence there. That could be a best-case scenario target by the end of next month, but I suppose any peace in our time might be enough to deliver that. Utopia is next, and here, interesting that we are slightly up on the day today with obviously a weekday. We've got another bounce of the RSI on the neutral 50 level. The big barrier here is the 200-day moving average. That's around basically 1.7 pence. Above that, though, looking for the next level up, which would be up towards 2.25 pence. Maybe that would be the best case scenario target by the end of this month, while we remain above the rising 50-day line, 1.3 pence. But the main hurdle is that 1.7 pence zone. On to Mila, and here the recovery or rebound continues. We're up to, we're very close to 1.75 pence, which is one of our targets here. Second target. Above that, not really much on the chart. between there and the old support there from July 22, around 2.7 pence. So maybe I can add that in for next time and see if the shares can deliver on that. You can see that obviously of late we've had the shares managing to find support in the old resistance area from back in June, so that was around 1.25. So the whole bullishness there relying on the shares of Mila remaining above 1.25, the old June resistance. Plenty of RSI rebounds at or above neutral 50. On to the last two. The first one is Rockfire, where people have apparently have very high hopes for this company. Here you can see that we've bounced off a rising 50-day line. Still need to get through slightly tricky 0.25 area, but above that, expecting quite a sharp move up to 0.35. The only thing missing at the moment is they need to get the RSI back above neutral 50, which hopefully it will do if we can get on the right side of that old target there, which was 0.23. Zenith Energy sneaked out an announcement about its ongoing arbitration situation, which the market seemed to like. We have bounced back to the back above the old initial October support, 3.4 pence. Above that, looking for the top of the range and the top of that falling trend channel from the beginning of the year, around 4.5 pence by the end of next month. The key here, I suppose, is getting back above the 50-day moving average at 3.75 pence. That's it for me today. More updates over the weekend.